All right, welcome back. Mike, we've been talking about possible scenarios coming up next week with USDA's report. How can producers prepare for that?
Well, the reality is the soybeans lead the charge in this recent run. They've maintained a strong price. We're sitting here at $10. If you haven't made sales on anything yet, that'd be the first place I'd start. We just made some moves into a really nice territory. That's a good opportunity to get some sales begun for the 2016 crop if you haven't already done that. And I think there's a time here to bring optionality into play. You can get some put options bought fairly reasonably still, considering all that's happened. Bottom line is prepare for a potential retraction in the marketplace, but leave the top side open in the event that we should see some news that really stirs things up. But this next report probably isn't the real big thing. It's going to be weather as we go down the road that really determines where soybeans make their next run.
Rich, considering we have seen this price move really in the soybean market, do you think that enticed an acreage shift? And does that change our balance sheets any in this USDA report?
It did shift things a little bit here. And here's the issue. Even with this massive change in price on the soybean side, we've only brought them maybe actually very close to corn revenue right now. So we actually haven't made that drastic of an adjustment once you look at revenue as a whole, including yield, which is very important, especially when you're making these arguments here. So as far as that goes, we do look for a moderate 3/4 million acre change out of corn into soybeans on the June report here, but nothing that's going to change prices right now at least.
But Mike, you say in your area in Wisconsin, it was planting so nice that actually farmers ended up putting more corn in the ground.
We've talked to some clients that in fact did put a little bit more in the ground because it was going in so well. And that's anecdotal to a lot of other places in our client reach. The bottom line is we had a really nice big window for a good chunk of the Corn Belt, and as fast as it could go in the ground it was, and they just picked up a few extra acres here and there. But to Rich's comments, there were some folks that made the decision in the price run to switch to beans, and I agree with them. I think close to 1 million acres will make that move.
Interesting. Okay, Rich, when we look at this dollar, it was helping prices, but we've seen a little bit of recovery in the U.S. dollar. Where do we go from here?
Despite this morning's problem with the unemployment numbers here, I think we got only 160,000 new jobs added to non-farm payrolls. As far as that goes, I don't really see any major issue as far as U.S. dollar. That's because we need to go down even further from here. I would actually suggest a mild recovery and therefore some mild pressure on grains here in the coming weeks as we see that change. Bottom line issue is, yes, we got some problems here in the U.S., low growth, not much going on as far as major increases for employment. But right now, we're doing equal, if not better, than most of our competitors.
Mike, when we look at this dairy industry, we had a story earlier in the show. It is not a pretty picture right now when we look at prices at a 5-year low. Have we hit bottom, or do prices only move lower from here?
Likely prices will continue to soften. We've seen cheese prices move to the lowest levels they've been since 2010, just coming out of that hellish 2009 period. It's very difficult when we talk Class 3 milk price specifically to make a run or even stabilize price when your core component of your pricing is reaching towards 6 years lows. Very, very difficult to do that indeed. Not to mention the fact that coming into this, we've carried some pretty decent equity, and most of the feed, especially in the Midwest, is bought and paid for and in the bunker, and there's really not going to be a change to that cash flow picture on the farm. So ultimately, production will continue, milk will be prolific, that will continue to add inventory and pressure price. It's a bad cycle.
So right now, the hurt isn't enough for them to cull some of those cows?
At this moment in time, we aren't seeing it. And March's report was very, very to that point. 10,000 cows added in the month of March. April, we're seeing continuation of that. We haven't gotten to the point of extreme pain yet where culling is happening.
Rich, what's the story in crude oil?
Bottom line, of course, with our problems with Canada up north, they got about 1/3 of the production offline. The problem is this is not actually impacting the actual facilities themselves, mainly with workers, mainly in the towns around those areas. So with this whole issue on crude, we've got a minor problem with production. Of really important note, we're not actually rallying hard. So we look for only a minor increase in prices going into summer, maybe into that 48, 40, 49 range, but we don't look for any major rally right now at least.
All right, we want to get your closing thoughts, so we're going to do that when we come back. Don't go anywhere. We'll be right back on U.S. Farm Report.
U.S. Farm Report is brought to you by the BV Series Round Baler from Kubota for earth, for life.